So you mentioned a few little bits about reducing the risk and putting things in place to stop yourself losing everything. Do you want to explain a couple of those things, like the risk percentage that we use and how we stop ourselves from losing everything, so that people understand?
Definitely. So there's we actually have about a 10-step process, but there's 3 major rules within that 10-step process. So the first one is you never ever place a trade without a stop loss. So when I say place a trade, I mean enter into the market. So we would never enter into the market without a stop loss. Your stop loss is an automatic order that when we place a trade, when we enter the market, it's automatically attached to our entry, and it says if the market is going to go against me, then I want to be taken out at this point. So I don't want it to go against me any further than this set point that I've already decided. So rule number 2 is that set point should never be worth more than just 1% of our entire account. So 1%, hopefully people realize that's incredibly low risk. And if we are risking 1%, then if our account is £10,000, I'm trying to do quick maths here, I use spreadsheets for everything, but quick maths, £10,000 in your trading account, which again, I'm going to say this, we don't start with that much money in our account. Maximum I want people to start with is 1,000, because you're going to make mistakes. Let's make those mistakes on a small amount of money. If you can start with anywhere from £500, then that's pretty good, but absolute maximum 1,000. But if we're risking 1% on a £10,000 account, that's only £100 we actually have at risk. And our reward, which is the third element that we're looking at in terms of our main 3 risk protection, money management protection stuff, is we want to be able to stand to make back at least the same amount of profit as we have at risk. So if we're risking £100, the minimum, absolute minimum we should stand to make back as a potential profit is also £100. And we call that risk to reward. So our risk to reward needs to be balanced, if not having our reward bigger than our risk. If our risk is bigger than our reward, no bueno, nicht gut. That's not what we want. We want to avoid that.
Yeah, and I think we were talking about on last week's episode when I was starting live trading and really feeling scared to press the button. And I was like, what if I get it wrong? What if I lose? And, you know, you just think of it in terms of 1%. It's 1% of my account, which is quite small. And I thought, okay, it's a few quid. I'm going to go for it. And it's really good.
Completely.
And now I've gone over the edge. I've taken the jump. And
you've broken the back.
Now. So I think that's really good advice.
And it's true. And that's why one of the elements of the star trading methodology, one of the 5 key points, is mindset mastery. And one of the ways we can really help our mindset is doing exactly that, reminding ourselves that our money management, our money protection system is only risking 1%. And that's part of the reason why we do that. Not only is it good practice and keeps us safe, it also allows us to be less emotionally charged. And what we want to do as traders is remove as much emotional charge as possible from our trading, because that is going to let us be the best traders that we can. Yeah,
and I guess it makes your trading quicker as well. Because if you didn't have those limits, you'd have to be watching it constantly, wouldn't you? But we just place it and leave it and
set and forget.
Yeah, amazing. Well, that's very good advice. Thank you very much for that. Do you want to hear about how my week's been?
Yes,
trading?
I do, definitely.
So I got over the hump. I am live trading and I'm trusting the process, and I'm really enjoying it. I've had a mix of trades, more wins than losses, which is really good. I'm getting into my routine. So I have my day. I might go on in the afternoon just to see what's going on.
Just have a little check.
And maybe flag a couple of things that might be happening. But I mean, you explained to me in one of the first episodes why we trade early or late, because it moves so much during the day. And I'm really seeing that if I'm looking in the afternoon thinking, yeah, that one, it will have changed. It could have changed completely by 9 or 10 o'clock at night. So that really makes sense.
Which I was going to say, in the nicest possible way, checking in the afternoon is kind of pointless.
Yeah. But it's new. It's novel.
Exactly, yeah.
I'm like, what's happening? How are all my little trades doing?
Yeah. And we all do that when we first start. I definitely did. Especially because when I first started, I had the app on my phone. So especially if I was in a trade, I was like obsessed. So I have to check it. How's it going? Oh no, it's going down. Oh, it's going up. Brilliant. Oh no, I'm trapped in this addictive cycle of just checking. So I actually had to delete the apps off my phone. Because otherwise I was just going to be constantly looking at it.
That's very good advice. I did message Josh the other day. I was like, Josh, what do we do if we're in the trade and it's kind of not looking good? And should I just stay in it and let it go? Because that's what we're taught to do, but it kind of doesn't look good right now. He was like, what are you doing? We don't do that. Go and have a walk, take a fridge break. I was like, what am I doing? Why am I sat here looking at things?
Yeah. So
And it was
just in
fun.
case people don't know, what's a fridge break?
A fridge break is when you just leave it, just go and have a walk, go to the fridge. I don't really know.
Have a little snack. It's a mindset break.
Yeah.
So if you're finding yourself trapped looking at the markets, because it can be a bit addictive, and because you're emotionally charged, aren't you?
Yeah.
Especially in the early days, you've not built the emotional calluses around your trading. It's a completely new skill set. So when you are more inexperienced on that level of your trading, you need to kind of take a bit of a step back, step away from your screens, go and check the fridge, have something healthy or have some ice cream. One of the two.
Yeah.
Keep yourself away from the screen for a
Yeah.
little bit.
I just went out in fresh air.
Yeah.
It's like, what are you doing? You don't need to do that. You've learned all the stuff. Just leave it.
Yeah.
Leaving it will do its thing. I'm also learning the second strategy,
Yeah.
which is much easier, I think, than the first one. But I think the first one, you're learning all the basics and the fundamentals, and then the strategy, and there's all these criteria, and you're trying to test it, and it's a lot. And getting the first one is really good, and then the second one, you've already got all the fundamentals for. So
Yeah.
you're like, okay, I now just need to add this and this.
Yeah.
And it's quite a nice strategy, and I think that the way that it works on the market movements, it could be bigger rewards.
Yeah.
Is that right?
It is, yeah. Yeah, that does. And you'll find in your back testing, again, if people don't know what back testing is, it's the way that we analyse and test to make sure that our strategies work. And you will find that as you do more back testing on that strategy, that you do tend to get better risk to reward.
Yeah. So I'm very excited about that one. And I think just generally I'm getting more confident looking at the charts, putting in my little lines and drawings and things. And the group coaching, I mean, I tell you this all the time, it's just really good. I don't want to finish ever. I want it to keep going, because every week, you know, Josh, the head mentor, pinpoints something else for you to look at, because there is quite a lot. There's quite a lot of moving parts, but once you've got one, he's like, this is great, you've got one, let's go on to the next one, and just pinpoints it and gets your skills kind of more refined each time.
Yeah.
So I really appreciate that. I think it's really nice.
Yeah. It's so important to not overload with everything you should be doing.
Yeah.
And if we tell people everything they're doing wrong on their first week, they're never going to make any progress. So it's so important to pick that one thing, you then master that, move on to the next, move on to the next, which is why it does take longer to master that first strategy. But like you said, after you've got all those foundations in place, so much easier to pick up the next one.